Yo, what's up everybody? So as promised, I'm going to make a general overview video after all the live streams that we do on Sundays because I know that there's some people that don't have time to sit through the whole thing. So yeah, to get started, right? We have PPI on Tuesday. We do have a holiday. So day before, day of, day after a holiday, it's low probability. So you just got to be careful on that. So that's going to drop our risk right from the get-go. First thing we also got to think about is power three. Okay, so if we think Sunday, Monday is accumulation, manipulation, Tuesday, Wednesday, generally expansion, right, or the distribution phase of things, and then Thursday, Friday is generally the cap of the weekly range. When we're looking at the news events, we have to make sure that we are considering these characteristics. You also want to think of daily profiles for the daily ranges. You also want to think of the weekly profiles, right? Tuesday high of the week, Wednesday high of the week, or low of the week, depending on what the narrative is, which we'll get into in a second. You also want to keep tabs on the first or the most recent high and low of the current candle on like the weekly chart. Same thing with the daily chart. Same thing with the monthly chart. And yeah, those are some of the main things that you want to focus on when we start the week. Okay. But again, the major key elements in terms of the news is going to be Tuesday and Wednesday. So PPI, retail sales, core sales, and then we got the red folder here. So because we have 5:30 news on Tuesday and 7 o'clock AM Pacific Standard Time, we're going to have to keep tabs on the response we get at this 5:30 AM Pacific Standard Time delivery and see if it doesn't really give us much. They're probably going to wait till the 7 a.m. time. All right, so that's kind of what we're going to want to pay attention to going into this week. All right, and keep tabs on some of the things that I just mentioned. Very important. So if we move on to the bonds, okay, we got the bonds. The bonds dictate or generally influence what the foreign currencies are going to do and what the indices are going to do. So if we think that this is going to go higher, what do you think is going to happen? Or what do you think we should expect in the currencies like GBP USD, Euro USD, and the indices, and even commodities, right, like gold and silver? Well, if this is going higher and we know that this has a heavy impact, well, it should impact them to go higher, right? Or vice versa. If we think it's going to go lower, we should try to find ideas that would favor that. If there's a correlation problem where things are not aligned properly, or if the bonds and yields, right? The bonds here, the yields are going to be next. But if those two are consolidated, or if they're cracked in correlation, or they just look sloppy, a lot of times that's going to send influence to those other assets I just mentioned. Like the DXY, if the yields are consolidated, and the other assets I just mentioned, like the currencies and the indices and the commodities, essentially, they may have a hard time rallying or just trending in general if these are not allowing it, right? We are at the start of, or the end of the year, and if you think of yearly power three, right, we have the last 2 months or the last quarter, because there's 4 quarters in a year. The last quarter generally in the yearly power three can cap the yearly range. So if we've been accelerating aggressively to start the year and we're accelerating up to the last quarter, well, a lot of times we'll see what we've seen recently when it comes to the Nasdaq, right? And there's the indices in general. They've kind of just dumped off because there's profit taking. There's a lot of things that are taking place, and the shutdown and all these different influences that were used as an excuse to tank the market, not in some crazy significant way. I mean, this is pretty significant, but in the grand scheme of things, hasn't really done much relative to the rapid rally that we've seen overall, which has been parabolic, right? Scrubbing back over here to the bonds. So if we see what's taking place here, if we move up to the monthly chart, right, we've basically traded into this wick, and this current monthly candle has basically been an indecision candle. So this previous month, or this current month that we're in, November, this has been the vibe for this asset, right? It's been kind of having some trouble. Okay. We also have that wick too, if you notice, right? This wick in here. And if you look at some of the highs, we'd also want to keep tabs on if there's SMT or not, right? And we don't really see much of anything related to that, right? But we are moving into this wick, and it is somewhat respecting that. We also have this monthly bullish order block, which you can see that I have outlined here in pink. Okay, so we'll keep tabs on that. We got the current high here for the monthly chart. Remember what I said a second ago. You're going to want to keep tabs of the current high and the current low of the current candle relative to the time frame you're on. And then you also want to keep tabs on the monthly high from the previous month and then the previous monthly low. You can see that this is also what ICT classifies as a inside month. There's an inside month, inside week, inside quarter, sometimes even an inside year, right? It's not really sure how common that is. I've seen it a couple times, but it's not overwhelmingly common that there's an inside year unless there's a lot of crap happening, right? But even if there's a lot of stuff happening, things do like to move. But it is a possibility, right? So you definitely want to understand that this is a fractal. This has a fractal nature with it, okay? Inside days, outside days. Outside days are basically when price breaks out of the previous candle's range, right? If you're on the daily chart and then the current daily candle breaks out of the previous day's candle, that's an outside day. If it stays inside, that's an inside day, right? Same thing goes for weeks, months, quarters, and years, right? Just a characteristic I want you guys to, be able to study. All right, so again, we're basically trading into this wick. We have the 50% level here. It hasn't even been able to break past the 25%, so we got to watch and see kind of what that's going to do relative to that behavior. If we go to the 2-week chart, we can see that there's a bullish order block. We see how every order block is holding in price. What does ICT say about order flow, right? How do you read order flow? Well, you want to watch the wick relationships when price trades back down into them or when price trades up into them, right? But in this case, we're going higher. So let's look at all the up wicks and look at the down wicks, right? Look at the relationships that are manifesting. How are order blocks being respected or negated? How are fair value gaps being traded and used, right? Are they being traded through, back in, leaving some open, and then accelerating? That's a bullish signature for order flow being bullish. Okay, are down close candles supporting price? They're supporting price. So up to this point, it's still been respecting bullish order flow on that higher time frame. We also got that monthly order block I mentioned. And it's ironic that we're kind of just resting inside of that. So it may be accumulating in that unless it was to violate this order block and basically break down below this weekly fair value gap in here. If it violates that, then of course, order flow may start to get disrupted, right? We may start to see price dig a little bit deeper. If it inverts that, then obviously we'll start to have an argument to watch up candles and see if they start to be respected. Once we see that, order flow has changed, right? Breaking down below this low, that'd be a shift in market structure. After a run on stops, we also have an up candle here. If we move up a little bit, we have this up candle. If we create another up candle, and then that next up candle here is violated, plus all the levels that I just mentioned, order flow may start to change. So, if that happens, we're not going to be forcing buys. Even if this was the Nasdaq, if this was any other asset, it would be the same thing, right? And another key element, right? Everything that I described here on this lower time frame, you can justifiably use it on the lower time frames too. Think of this as if it was the 5-minute chart, right? If this was what we were watching and this was like a daily high up here or London's high, we'd be thinking the same exact thing when we're looking at this, right? And then if it does peak down below this low, we'd have to watch how it peaks down below that low. Is it going to tap below it with a wick and then just skyrocket back above these levels? That's a lot less bearish than it would be if it displaced and stayed below it. Okay? So yeah, with that being said, we're going to continue to monitor this. Watch how the wick is respected. Watch how this little area in here is respected. Again, we got this 2-week order block in there. So we definitely want to keep tabs on that. And, we're kind of inside of the range. If you go from this low to that high, if we measure that out, right, we're right at equilibrium basically. A little bit below it, but, we'll see what happens, right? I would say that this market, I would need a little bit more information to really solidify my opinion. I do believe that if we're going to favor anything, we're going to favor that this is going to continue in its bullish trajectory, right? And, same with the 10-year here, same with the 5-year, right? Nothing's really breaking structure overall. Things are still being respected to the buy side, right? Down close candles, fair value gaps. It's getting traded through a little bit, but then we're coming right back above volume imbalances. So we got to wait and see displacement because at the moment we're in time distortion. We're in consolidation. It's totally reasonable because of the time of year we're in, right? We're in the ending portions of the year. Like I described when we're talking about power of three, it happens on the yearly chart too. Okay. The yearly range has a power of three. And I did mention this. Let me actually kind of pull that up real quick. I shared that here. So if we maximize this real quick, this is something that I did on the live call today with the YouTube family. I showed how this is the beginning of the year, so consolidation for first quarter, manipulation, right? Manipulation continued into the second quarter. This low, if you go back and back test and review this on the Nasdaq, you see that this was also, excuse me, this is also a yearly bullish order block. I picked the low. You can go back to this time back in April, March and April, and you can go see what I was talking about. I literally picked the low, and then once we got up above here, I was bullish from that point up till today. As price just continued to run higher. Then you got this third quarter here. It was just another expansion carrying over from the second quarter. As I said, the first quarter consolidation manipulation, it bled a little bit into the second quarter, but then blasted off just like Tuesday and Wednesday does for the weekly range, weekly power three. And then the third quarter basically continued to rally. And now we pushed higher into the fourth quarter. And now what's happening? Just like how it does on Fridays for a weekly power three, it's now creating the opposite end of the yearly range, right? Opposite end of the bullish power three, right? So this yearly candle is a bullish candle with a large wick below, open price somewhere in here, and then the body comes up to right here where we're at. So it's a pretty decent sized body, but huge wicks because there's been a lot of manipulation this year. Okay, so I just wanted to share this with you. I did share this on the live call today. So I do encourage you guys to hop on the live calls generally every week because we have been pretty damn accurate all year. And if you guys get value from what it is that I do here, I do want to remind you to like the video, subscribe to the channel if you haven't already. It helps me get in front of people that truly want to learn, and I'm truly trying to help, right? I'm truly just trying to lend you my time, my experience, and for free, So if you could do me that favor, thank you in advance, right? So again, hopefully all this stuff makes sense for this asset class. Hopefully it makes sense as far as why this is important. One thing I do want to pull up real quick to kind of just stuff this in here. I want to give you guys this little PDF, right? Maybe I'll put the downloadable PDF in the description if you want. Just let me know in the comments. But yeah, so risk on is essentially, basically it means that investors are willing to put risk on other assets opposed to the DXY, meaning that the DXY is going to go lower. All the other assets like indices, commodities, and the bonds, aka this thing that we were just looking at, right? This asset class we were just looking at, are going to go higher, and then the bond yields, which is going to be the next asset we're going to look at, is going to go lower, right? So that means lower DXY, higher everything else. That's risk on. Risk off means investors are willing to put risk off on other assets opposed to the DXY. Or so they're basically going to put their risk on the dollar and risk off other assets like the indices, commodities, the bonds like we were just talking about, and then the bond yields, which is what we're going to talk about next. You want to see those go higher as well. Okay, so this is why we do this type of analysis every single week. And this is why the calls are so long, generally for the live calls, right, every Sunday. And of course, I'm answering questions and all that. So again, if you guys haven't hopped on those, and it's your first time watching a video from me, definitely consider hopping on those calls with me every weekend. It is highly beneficial, and the students that are in there on a regular basis will also testify to that as well. But yeah, so again, if you guys have any questions about this asset or any other asset, hopefully this makes sense so far. But if you do have any questions, leave them down in the comments and I will do my best to get back to you. But yeah, so we're going to watch and see if this is going to hold up here. We do have these equal lows down here, which are pretty suspect, but we don't really have any indications order flow wise relative to those higher time frame levels. Like we're above this, right? If we were below it, it'd be a different story. That'd be like bread and butter, easy peasy, lemon squeezy. let's just take out the lows. But at the moment, we got to watch, how's it going to respect these levels, this volume imbalance? How is it going to respect the 50% of this? So far, it's just balanced it out, traded both sides. And so whichever side it breaks out to, it's going to leave behind a balanced price range, right? Because it's trading both sides. So if it goes up above it, taps it, and rallies up, it's a balanced price range down below. If it goes like this and then drops and then comes back into it and then displaces, it leaves a balanced price range to the buy side, and it'll favor downside, right? And then, of course, breaking down below multiple PD arrays, 3 specifically, it's a good validation tactic to utilize, which is what ICT has taught over the last couple of years. He's kind of said it for years, but specifically over the last couple of years, he's really mentioned that on multiple occasions, right? So we use it faithfully, and it works. Okay, so yeah, with that being said, let's move on. And for those that may not know, this is the assets symbol for the bonds and yields. People get confused about that, so here you go. Take a screenshot of that. Okay, so remember this asset. Remember this asset right here. This is the bond yields. Okay, so the bond yields dictate or influence heavily what the DXY is going to do, right? So at the moment, we see that we're kind of stuck between this, massive consolidation up here. We're kind of at equilibrium. You see this monthly EQ. So we're stuck at equilibrium. When price is going side to side like this on the higher time frame, weekly, monthly, daily chart, that's generally going to put you in low probability conditions. Okay, and considering the fact that we're at equilibrium, on top of the fact that it's kind of in a range at the moment, this one is too, right? The 10-year and the 5-year. The 5-year and 10-year are a bit more weak, or a bit more interested in offering sell side delivery. So we'll kind of see what it really wants to do. Well, let me kind of clean that up. We got previous week's lows here, right? This is last week's low below this candle. So again, you want to make sure you mark off the current candle's high, current candle's low, and then any highs and lows relative to the previous candles that are close, especially when you're on these higher time frames, because they take so long. It could just have one little candle that blows this out, and that's it, while you're targeting down here, right? But when you do things like this, like looking at the higher time frame levels or higher time frame frameworks, and then you're identifying the current candles, because it takes so long, it allows you to have near-term liquidity, right? Because it takes so long, you don't want to have to wait till this in order to find an entry to frame something off of. If you simply just use the current candle and the previous close proximity candles and close PD arrays, which, highs and lows are obviously PD arrays too, but this just helps you get closer to price and find what's truly important at the moment, so you can have a constant revolving door of opportunity. This is true for the monthly, weekly, daily, the 4-hour, 1-hour chart a lot of times. You have a whole 24 hours to identify highs and lows on when you're on the 1-hour chart. So it's pretty eventful to use those highs as well. But to keep it simple, just think about some of these things that I've just mentioned here, okay? So if we're looking at the structural ideas in here, we're kind of stuck between a monthly fair value gap that's over here. Like if we move up a little bit, you can see where I'm getting it. It's right there. So because it's in close proximity, I'm going to use it as a level to go off of. We have an order block here that was violated. If you go back at with some of the videos a week ago, we could see how, we were talking about this wick in here, right? There's a big monthly wick in here as well. And then if we go back to the monthly chart, we can see there's a wick in there too. Okay, so we got to watch how it's going to respect that. And we can still see, we're having down close candles get violated. We are inside of this one. We're right at the 50%. And you can see the body's respecting it. That's not indicating to us that it's overwhelmingly bearish. So just like on the other asset, the bonds, we have to kind of wait for more information in here, because it's kind of a 50-50 shot. If we wanted to stick to like what the overall order flow looks like, we're in consolidation, right? It does look like it's trying to get lower, trying to come and take out some of this trend line liquidity, which it has done a little bit of, but we do have pretty obvious lows down here that I wouldn't be surprised if it peaked down below and tried to sweep. Maybe it'll have a harder time here, But we'll have to just wait and see. We do have this gap down here. If it does break down, I could say that if we break below this wick, this down movement, up movement, followed by another down candle, I think that would end up, well, I know for a fact that would pretty much act like a balanced price range, and then we'd probably be able to, send price down, towards those lows. Obviously, nothing's guaranteed, if something changes and something changes, but I think that'd be a good idea to go off of if it gets down there. And then, of course, if it respects this, we got these up candles in here. We do have this up candle, right? It is a bearish order block, but we're kind of trapped between this delivery, this monthly fair value gap, and then this monthly order block here too, the 50%. So again, more information is needed for this asset. Hopefully you guys understand why. If we do break to the buy side, and then we were able to continue to hold these levels, as I've been mentioning for the last couple of weeks, if we really attempt to get through this, we have these highs up here that create trendline liquidity, and then we can kind of look to see if that could be targeted too. Plus we got this monthly low. If we do break down and get below this weekly fair value gap, if we get down below this monthly fair value gap, then we also have these quadrant levels as targets too. So regardless of what it chooses to do, even though it's a 50-50 shot, we're basically trapping price. And whatever it chooses to do, we're going to have a game plan for. I'd prefer, if the DXY is going to keep running to the buy side, I'd prefer to see this go higher. If the indices are going to continue to go lower, right, and we're going to maybe target lower prices, I would prefer to see the bonds go lower, right? Basically fail to go higher and then come towards some of these levels down here. But again, we're going to have to just wait and see because things are kind of stuck, right? And sometimes it's that way. It's that time of the year, holidays, big money's going to step away. So you got to be very cautious. Just a reminder again, you're going to want to lower your risk, especially this week because we have a holiday. Okay, so hopefully you guys understand that, and hopefully both these assets make sense. And as far as what we're looking for, what possibilities lie ahead potentially. With that being said, if you have any questions, let me know in the comments, and don't forget to subscribe and like the video. Definitely helps the channel out. But yeah, so the DXY, like I spoke about in the live call this morning, we see that price is not giving up going to the buy side. Similar to, what was it? I think it was this one, right? The yields, basically what indicates or dictates what the DXY is going to do. You kind of see the similarities, don't you? It's not perfect, right? Correlation doesn't need to be perfect, but for the most part, you could see the similarities, right? If you look at the 30-year here, you can really, really, really see that movement, right? Down close candle supporting price, go to the DXY, down close candle supporting price, okay? And what I'm trying to see now, we have this large wick in here. So you can see me depicting that right here with these lines, the quadrants. So what I'd like to see, we're going to think of power 3. Okay, but first and foremost, we got to remember, identify relative to the time frame we're looking at, the current candle high and low. If we're looking at the weekly, the current weekly high and low. If we're looking at the monthly, current monthly high and low. And we want to gauge what the likelihood is of price reaching to one or the other. It's a very easy way to identify or assist you in identifying where price is going to go without having to look at this extreme high up here or this extreme low down here, which may take months to get to. And what are you going to do? Sit on your hands for months? I mean, I don't have the patience for that. Like, I'm a day trader, short-term trader, so it's not my cup of tea. Maybe it's yours. Don't let me pull you away from that longer term view, but I mean there's more things that you can do, right? So why not try to take advantage? So with that being said, again, we got this fair value gap in here. We got our high, right? We got a previous candle's low that's been swept. We got Friday's low resting in here. So what I'd like to see is something like this, right? Open up if we're going to be bullish, have a bullish power 3. We do have a high up here that's still relatively close that could be targeted. I don't think this is a big enough run above the high. We have kind of got up above this high pretty solidly, right? We do have a monthly wick in here. We're inside of the 25%. I'll let you go to the monthly chart and go observe that. But we're basically tapping into that, so we definitely want to see how it's going to treat that, and then how it's going to, be treated when it goes down into this weekly wick that we're pointing out here too. And I wouldn't be surprised again if we open up wick below this low here, use it as counterparty liquidity, and then try to shoot up. So that's what this is basically depicting in here. Okay, so if something like this was to happen, we would get in line with some type of bullish power 3, some kind of market maker buy or market maker buy model, preferably, and then try to find one of the 4 models that we use, whether that's a YouTube model, Razor model, the one that's part of the private group, market maker models, breakers, institutional order flow entry drill, right? Whatever the case may be, we'll find something. So yeah. With that being said, I don't really think there's much more. You could see that we came down, rallied up. This was a market maker buy model. This was a market maker buy model. There was market maker sell models in here as it was going lower on the lower time frame. But if you're bullish, expect market maker sell models to fail. If you're bearish, expect market maker buy models to fail, because all those market maker buy models are going to do, if you're bearish, is going to go up, tap a premium array, and then decline and set up a market maker sell model, and then vice versa, right? If you're going to the buy side, it's going to fail market maker sell models just to create market maker buy models. And that's kind of the logic it's using. The algorithm is using to do retracements to go higher, and all it's doing is retracing the discounts to go higher, discount arrays to go higher, sell side liquidity to go higher, and the sells are doing the opposite, right? So yeah, we're also above this new day opening gap in here, so we definitely want to watch how that's going to behave. We do have a pretty solid displacement in here, so we'll see what it really wants to do. But I'd prefer to see if we can drop down like this and then try to get back in line with buy side. I'm not going to be looking for shorts or this to go lower. I definitely think that we still at this moment, until we get down below here and invert this fair value gap, I think we do have a good solid chance to continue. We do have that order block right here, right? It is a 2-week order block. Oh, I guess it doesn't have one, huh? We had one in there and it used it. I guess it doesn't have one, huh? Interesting. So yeah, once it gets above this high too, there's sell side delivery, buy side delivery. So I would be looking at that to basically hold the 50% of that range that gets left behind. So I'm anticipating that this is not going to want to dig deeply into this, unless of course it's going to violate it, in which case if it does, I'm going to be looking for the sell side down here, and then we'll make an adjustment relative to that if necessary, right? But we're going to stick to one side as we always do. Clearly order flow is still bullish, so why are we going to go away from it? So with that being said, hopefully that makes sense. Let me know in the comments if you have any questions. But with that being said, with those 3 assets out of the way, if we move over here to the currencies, we could see that that's had a heavy impact. The bullishness has had a heavy impact, and we've been calling for months, weeks, I think months, months, that this was going to potentially drop due to the SMT up here and the strength picking up, or interest for price to be offered at to the buy side in the DXY. That's definitely had an impact on the way that these assets are going to be engaged. And we could see all the downside delivery that we've been expecting has come to fruition. If you go back and look at the videos, we've predicted all of this across all these assets, right? So again, the proof is in the pudding. It's out there for you to go review if you feel inclined to do so. But yeah, the price ain't getting away from us. It rarely gets away. And again, I say that because I've proved it. So I think that that's going to continue. And if DXY is going to continue and there's nothing that changes, I mean, we could see that this fair value gap in here, right? It's pretty solidly holding. And we do got a low down here. We got a wick. We do have a daily bullish order block here, if I'm not mistaken. It's a pretty massive daily order block right there, right? So it is kind of stalling out. A good idea to keep in mind, price when it goes like to the sell side, right? When it's dropping and you hit an opposing PD array, or if it's going higher and it hits an opposing PD array to the run up, it's going to generally trigger in this type of behavior, this like a retracement type of vibe. And that's how you can start to go about framing counter trend moves, because it doesn't just go down and down, 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 down. It goes down, hits an opposing PD array, then goes up to another PD array, aka internal range liquidity, aka a fair value gap or an order block, or a high, a short-term high with one of those PD arrays, and then it starts to dump off again, creating a market maker sell model pretty much every single time. All right, this is a constant thing that goes on. Or it's going to consolidate and not do anything. But even in consolidation, when it bounces back and forth, you could use market maker buy and sell models, right? To target the high, to target the low, as long as it stays in that range, that's a kind of logic you can use because market maker models are universal, right? Maybe that's something you guys didn't know. But yeah, definitely go back test that and prove me wrong, right? But yeah, so we'll see how this wants to continue. I do believe that we will continue this. Now, what changes my opinion, right? I'm even more convicted with this because we do have a run above the highs here. So buy side's been engaged, sell side's been engaged. We got a breaker, right? Low, high, lower, low. We got an inversion fair value gap. We also have an order block here. So breaker, order block, and we also have this down wick and this inversion fair value gap, or reclaimed fair value gap and an inversion in here. So we'll see what it wants to do. If DXY keeps skyrocketing, this should end up continuing to tip over, and we may end up seeing price try to fill in some of this, maybe even get excited enough to dump all the way down to here if the dollar is going to keep this momentum or interest to go higher, because there's no volume, right? There's no buying and selling pressure. It's all offering. It's like an auction, and they're offering price at different levels, and people are buying it or selling it, and there's winners and losers. That's how these markets operate, right? It's just kind of the way it is. At least it's heavily the way it is in futures, and this is the futures market for the currencies, right? So yeah, what's going to change my opinion is if we get up above this high, because this should be classified as an intermediate term high in here, right? Because it came into the fair value gap, and we have a lower high to the left, lower high to the right, especially if it forms a high up there. And then once we displace, it's just going to be even further confirmation, because if we also count this as a change in state of delivery after a stop run with a logical level that rejected price, we do have equal highs up there. So if it does race up there, we have to pay attention to that. But because this has a change in state of delivery here and a stop run, and the DXY is going higher, it's reasonable to expect that this should hold. And if it doesn't, and we get up beyond this 50% and disrespect this breaker and disrespect this order block, I mean, that's an early indication that price is going to start ramping up to the buy side. And then again, that'd be a reason for us to adjust. And so, we would take that as a pretty clear sign that we shouldn't be forcing shorts for those of you that are currency traders, right? And even if this was a Nasdaq, it'd be the same thing, right? It's all the same, just a different asset. So yeah, this will be my invalidation. Early signs of invalidation will be the 50% of this, because we'll have this being disrespected, turn to an inversion to go higher. We'll have the breaker getting invalidated. We'll have a new order block being formed. We'll have this up candle or this down candle also being traded through. And, the deeper it gets into this, the less likely that is to hold. And then, of course, once we take this high out, my attention would be a little bit deeper. I'd try to see if we can capture some of this and then see how far that baby wants to go, right? And then fully inverting this daily fair value gap puts us in position to then try to target some of this trend line liquidity up here. But honestly, until the DXY turns, I'm not too confident that this is going to fly too aggressively. We do have SMT in there, but again, the only way SMT is going to be useful is if the DXY can agree. Because if there's a bullish SMT, but the DXY is rallying, because of the risk on, risk off correlation these assets have with the DXY, it's a no-go. Like it's not trustworthy, because we're trying to build trust, right? Like we want to have trust in what it is that we do. And that's something that kind of knocks the trust off, right? So yeah, with that being said, I'm going to continue to try to trust that this is going to go lower. Okay. And you could even on your chart outline this. So I don't want to see it get beyond that. First line in the sand is here. Final line in the sand is up above this high, because that'll basically be turning everything off. It'd be multiple PD arrays, the breaker, order block, and the fair value gap here, and the wick. So that's numerous PD arrays that get violated. So we got to go to the buy side, right? And then if that does happen, DXY will probably be dropping as well to allow this to do that. But I don't think so. I don't think it's going to do it, right? But we'll see, right? Anything can happen. But that's my opinion. And then, of course, we got the low down here as a target. We got this here as a target before anything. Well, this is the most recent low. So we'd be looking at that first, then that, then the gap here, and then the low. All right? We even got the quadrant down here too of the wick. Okay? So let me just highlight this real quick. So the wick that I'm highlighting here with this is literally this big giant wick up here. So you can see the quadrants playing a role, pretty significant role as dynamic support and then dynamic resistance too. Right? So yeah, with that being said, let's move on to the indices, and get you guys out of here, right? So yeah, we got the overall. Let's go to the monthly chart. From this monthly chart, we can see that the previous monthly candle has been taken. So like I said, if you would have been on this month and then this new month formed and you mapped out the high and the low of that previous month, you'd have had your extreme highs and extreme lows in terms of liquidity. That's relevant right now, right? Like, because if this this new month is going to go higher, it's going to have to take out this high. I mean, that's just the way it is, right? Like the next candle has to take out the previous candle in order for it to move, to go higher. It doesn't have to. Like, it could just stay consolidated. But generally, that's what's going to happen, right? It's going to have to take out, if it's going higher, that's going to be the target. And it's going to use power 3 to get there, just like how this one did, right? It opened up, dropped down into the previous candle, the previous month's candle, right? The previous month's range. And then it rallied up, taking out what? This high. So you think that run lower up to this high, that probably created a market maker buy model, right? If you think about it. And then, you could have used that framework to then try to target that high and find an opportunity on those lower time frames on whatever day would have, allowed for it, right? So take what I'm saying and go back test it, right? Because it's very eye-opening in terms of liquidity navigation. But same thing here, right? It opened up, came up, failed to break that wick, failed to break that high. So what happened? It declined. What did it reach for? If it's going to go lower and maybe reach even lower, it's going to have to target the previous candle. It's the monthly chart. So it takes a while. So you can use this liquidity for a while. And then when there's stuff that's even, a little bit further down the road, if it seems logical to get there, you can use this repetitively, right? I know you guys have probably heard of ICT's 20, 40, 60-day look back. Well, if you take the current month and you you look back 20, 40, 60 days, I mean, you'll align with one of these liquidity pools, right? And so if it's going to drop and you want to use that tactic, I mean, you could see kind of how that operates and kind of how that would be helpful. And if you go to the monthly chart, I mean, this is an easier way to do it, honestly, at least for me, right? Just look at the previous candles, the previous 3 months, highs and lows. And that's what, 30, 60, 90 days, right? Minus weekends and stuff like that. Same thing with the highs, right? So like if it was to react here and go higher, right? It just basically swept this low. If we stay above that low and then start to rampage through and then we break the 50% of this order block in here, what do you think is going to be targeted? Right? Overall, long term, on a month-to-month basis, it's going to be this high here and this high, especially because it kind of left it. You do see that there was an SMT in here. So that was in part the trigger. You see that the S&P also made that failure swing. So because the S&P is pretty powerful and has more stocks, it's more weighty, right? Like the weight gets thrown around a little more than the 100 stocks in the Nasdaq and the 30 in the Dow. So that's heavily influential when there's an SMT, and the S&P and the Nasdaq make the failure swing, but the Dow creates that higher high, right? For a bearish SMT, the S&P is going to be a lot more weighty, so it's more likely that it's going to be valid, especially if we can get DXY to agree. which hasn't necessarily been the case. Well, I guess it has, huh? Because DXY has been rallying aggressively. So yeah, I guess that makes this make even more sense, right? And then again, what was the target? The previous month's low. So you take this perspective, right? You definitely want to mark off that monthly order block there. And you also want to mark off this current monthly low, and then the monthly low that's closest, that's here. So if the next month that we're going into is going to reach even lower, right? Say it's going to continue to drop. Say we expect it to drop, and maybe it's going to target some of this. But before that, it's going to have to take this out and then this. So you want to keep that in mind. And then when the new month starts, maybe it opens up, rallies up into this order block, and then tries to deliver lower for the rest of the month, next month. I mean, this is how you can kind of start to model out what could potentially happen longer term. So then you can have some notes on this going into each week. And the next thing you're navigating those lower time frames, but you remember like, oh wait, the monthly chart's doing this, this, and that. So you can kind of make more sense of those lower time frame moves, and you can stick to your narrative. When you're rooted in these higher time frames, you could stick to your narrative much better, and you're not gonna flip flop back and forth like a lunatic, right? And you don't want to do that, right? So if we take that information and we go to the weekly chart, open this up a little bit. We do got a low, high, lower low. We got a breaker. Okay, so we'll see kind of how this wants to behave, right? If we stay below this, if we open up and we are going to go lower, we automatically, first thing we think of is the low here and the high from the previous week. Where's a close proximity low next to this one? Well, we took out this one. So if we look here, this is a weekly low. So that's liquidity. Aren't these relative equal lows here? We are inside this monthly wick in here, right? If we zoom out one more time, just so you guys aren't lost, we have this in there. So we have to account for that, right? So we'll see how it wants to behave with this. And of course, if we were to rally up and aggressively reprice and get beyond this breaker, that would be a pretty significant sign that we're probably going to keep going higher. We don't want to sweep lows and then rapidly reprice back into the range. That's a lot less bearish than we want, right? If it does that, that's a signature that's very common for liquidity, raid, and reversal, right? Especially when we have SMT, which we do. We have it at the highs, which triggered in the drop, and now we have it at the lows. So when we have two SMT, you got to use the DXY. You got to use what the bonds and yields are doing. Trust that over anything else. And if there's a mix up, like everything's doing whatever it wants, you're in low probability conditions, and then you just have to go off of what these are doing, right? And then just kind of observe the relationships day to day, or you could simply wait for more information. There's nothing wrong with that, right? But we're going to basically be observing this. We have an order block here too that it's basically used. So I am of the opinion that I want to see price open up. If DXY is going to keep going higher like we assumed, and this is going to be the cap of the yearly range, I would love to see us try to come back down and target this down here. I've been eyeballing this all year since September before the first rate cut, and it just failed to get down there. So it seems like we're now potentially getting ready to target the downside, right? We do have a lot of PD arrays that have been violated in here. So I would definitely like to see that continue and then use this as a breaker. Maybe it gets down there by the end of next month. Maybe it doesn't because it's the end of the year, and maybe it just hangs around and then saves that for next year. We'll obviously have to wait and see because after all, this is the higher time frame. But for the next week, liquidity is this low, this low in here. Maybe it opens up for Sunday, Monday, rallies up into this to scoop up a little bit more. We have the down wick in here. This low to that high should be able to present us with the balanced price range because that's what a breaker is. That's what a bearish order block is, a bearish and bullish order block. They're basically balanced price ranges. Pretty much all PD arrays, for the most part, are leaving behind a balanced price range. That's why they should be respected. And if they're not, if three of them are broken, that's like three balanced price ranges being violated at the same time. That's how I look at it. So that's why that 3 PDA rule is so powerful for validation and validation. Okay. So yeah, if you guys got any questions about these things, let me know. I tried to get through this as fast as I could. I mean, there's still a lot to talk about. So um, but yeah. So hopefully that makes sense on that higher time frame and what we're basically identifying. Again, we have these monthly wicks that we do have to pay attention to. We want to make sure we're aware of the levels. So when price does trade back into it, we can kind of see already how price has traded into this order block, and it's definitely respecting it. So if we can continue to see that, maybe have another candle open up here. This is Friday's high, Friday's low. You definitely want to mark that off. Remember the rule, when you look at a higher time frame, the current candle's high and low are your most near-term liquidity. That's the most important. Because the next candle that opens, if it's going to go higher, it has to break out of that. So if you're looking at the daily chart and you identify this high and that low, and you can identify where that candle is going to go, you have a draw on liquidity, right? Like that, developing the skill set to trust which one's going to be targeted over the other. Obviously, you gotta just allow yourself to gain that experience. I mean, I teach that every week, how to do that, and then I show it, and then it plays out, So stick around here, and you'll definitely get that clarity, right? But yeah, so to start this week, I want to see if we could open up. I don't think it'll be able to get up here if it is going to be bearish. If we are going to target sell side, I mean, we're kind of trapped between this wick 50% and this breaker. So I don't want to see us break to the break beyond the 50% of this breaker. If it does, especially if it gets above it, again, that's multiple PD arrays being violated. That's too strong of a reaction from the low. That would make me start to feel like, okay, we're probably not done. This is probably just a stop raid, and we're going to continue, going higher. So we'll continue to monitor that and see if that's, something that takes place. Until that happens, I'm not going to believe it. I mean, this is super aggressive, and we've come off a shutdown. I mean, there's so much crap happening. And we're so elevated for whatever reason. We've been due for a correction for a while. We've had a good amount of them this year, but all in all, it's just been rampage. And if we think power 3 and know that power 3 is how the market operates, we're at a moment in time at the end of the year. So end of the year, end of the week, end of the day. Generally, if we hit a significant level, price is going to pull back. That's just the way it is. And it's reaching for a discount. It's looking to the rich people are trying to take profits. It's almost tax time. So they got to, do the whole, profit taking situation before taxes come out. So lots of complexities when it comes to that. So all these things are a factor as far as what's happening. Plus we had earnings, I think, recently for a bunch of different companies. So lots of profit taking. Okay. So yeah, that's kind of pretty much all I wanted to talk about. So we'll see if we can't get price to try to dig a little bit deeper. If it breaks through these levels, again, we have contingency plan. We have main focus for pretty much every asset except the bonds and yields. We need more information. But for the most part, it looks like these are going to potentially continue to go higher. We'll see though, because the Nasdaq and the indices look like they're trying to go lower. So we would enjoy and like to see this, respect this, and then break down, really attack these lows. We do got resting liquidity there. But again, you can make an argument for either because we're kind of just stuck, right? It's balancing out this FVG, really dancing around this upper portion of this monthly inversion fair value gap. So, we'll continue to monitor that. And, same thing here, but we do got potential relative lows that we could be targeting like this. I mean, this is beautiful down there. So I wouldn't be surprised if they do tank it down there for the yields. But again, if it's going to do that, it's going to have an impact on the DXY. I mean, the impact's going to be across the board, unless we're going to be cracked in correlation, which, we're at a time of year where that can happen. So we need more information for these two, but these are some of the levels. The DXY, I want to see if we can't get this to run up, continue to respect the things that we talked about today. If that happens, I definitely want to see these levels hold, right? So we'll just attach this. We'll see if we can't get price to come down here. If not, you guys have my contingency plan. Breaking above the 50% of this gets us up to this high. Breaking above this high gets us up to, running deeper, and then potentially seeing bearish DXY. And then, of course, for the indices, we're going to try to observe what's going to happen with this breaker. Let me just go back to the other one so you don't get confused. See what happens with this breaker in here. Friday's high, Friday's low, right? Don't forget, right? This previous week's high, previous week's low, and then you want to take down previous month's low or current month's low, and whatever's in close proximity, which would be this one and the wick. And we also got to again watch what the response is going to be from within this wick too. Right, but overall, in closing, let's see what we're going to do here. Think power 3. Let's kind of see what it wants to do in here. Is it going to open up, try to rally, attempt to grab this, but it can't, and then reject and create a market maker sell model? One last thing I want to point out is when price goes up and drops, think market maker sell model in a bearish trend. If we're going higher and you see a drop, think market maker buy model, market maker buy model, failed market maker sell model to get down to here. And then once it confirms by doing something like this, like inverting a fair value gap, think market maker buy model. Downside retracements to go higher, buy model. Retracements higher to go lower, sell model. Right? I mean, we navigated this too. If you go back and look at some of the examples in my free community, and those of you in my private group, you guys were there with me. We navigated buy models and sell models in this whole wild whipsaw. And, this is pretty amazing experience for everybody. Same thing here. All right, buys and sells. So if you guys are interested in apprenticeship, we do have, it's closed now, but you can get on a waiting list. But you can always join the private group as a tier 1 student. Basically, you get live calls every day with me. You just don't get the previous recorded videos, amplified lessons, and one-on-one access. That's specifically exclusive for one-on-one students. But you get access to the community. It's the most reasonably priced in the industry. And then, of course, if that's not for you, then so be it. I appreciate you regardless. If you support this channel, definitely don't forget to like the video, subscribe to the channel. And for those of you on YouTube, I'll catch you guys on Tuesday. For those of you in my private group, y'all know the vibes. I will be talking to y'all bright and early tomorrow as we try to take on another week. All right. So God bless you guys, and I'll see you on the next one.